Hi all, this is Janathan from Tanish Capital. So in this presentation, I am just planning to cover what are the basic things you should know if you are going to trade with option derivatives. In Indian market, we mainly have two segments in derivatives. One is future, another one is option. If you are going to trade in futures, the capital required will be minimum 1 lakh or 2 lakh. If you don't have that much capital, you can't trade in futures. Some people used to trade futures in intraday, but it is like as it is a very sort of like leveraged product that risk also will be too high. So that's the main reason most of the people comes to option and they thinks like buying option is more safe. But the problem is as the capital which you require to buy option is very less, something like 5k, even with 10k, you can trade in options. People thinks like they are trading with very less capital, so the risk is very less. But if you see the main, what is the main purpose of option instrument? So most of the institutional investors and big hedge funds, they use this option instrument to hedge their portfolio. Let's say if you are going to have hold a portfolio for in crores, you should definitely should hedge the portfolio with the options. So what is hedging? It is like protection of your portfolio. But where retail investors, instead of using that option for that purpose, we started to gamble with small capital. As we think like buying options will make us rich so quick, or people will think like with very small capital we can generate more amount of money, like with 5k we can investment, we can go for a profit of 50k or 1 lakh, something like that. But in reality it is not happening. So what will happen in the long run? First you will come and start with the 10k capital in option buying, you will lose in that month, and you will think like in another next month you are going to make more money, and again you will invest another 10k. Like that you will keep on continuously do the same mistakes for 3 or 4 months, and if you see the end result after the 5 or 6 months, if you calculate your total loss, it will be close to 1 lakh. And one more problem is in social medias. If you go and see in social medias like Twitter, Facebook, and common places, lot of fake trainers or fake call providers or someone who they used to call themselves as like god of option, they are just misleading the people and they are just trying to create a greed for the retail investors by saying a lot of like tempting words, something like you can easily make money in options, option buying is a very easy option. So like that they are just misguiding a lot of retail investors. So best option is instead of following these sort of people blindly in social media, it's better for you people to understand what are the basic things we should understand in options, and slowly you can develop your knowledge and you can do everything by yourself instead of depending on other. And please understand, option instrument is mainly for selling or hedging purpose. It's better to avoid doing option buying. Okay, let me go into the topics. What all are I am planning to cover in this particular session. So we are mainly going to see about CE, what is CE, what is PE, and what is option chain, what is ITM, ATM, OTM, what is lot size, option premium, what is expiry date, capital required, option buying and selling, option strategies. People who are totally new to the options, for them definitely these are the basic things they should know before they are going to trade in option segment. So in simple, what is CE? On this is like usually if you come to market, people frequently use this word called bullish and bearish. Let's say you are seeing on script TCS around 2000 rupees and you are thinking like this TCS is going to move another 200 points, 300 points above this 200 level in few days. So people used to say that is like bullish stock. So if you are feeling that that particular stock is very bullish, you can go on buy CE. So CE is like something like call option. You can simply keep it as like if you are feeling that particular stock is bullish, you can go for buying CE. And the PE is like opposite of the CE. So if you are thinking that same TCS stock which is trading around 2000 rupees going to fall down or going to price going to reduce to 1800 rupees or 1700 rupees in near future, you can go and buy for PE, which is like put option. So this is a simple definition and basic information about CE and PE. CE means call option and PE means put option. And what is next one is option chain. Option chain is nothing but the tabular column where you can get the detail of the different contracts available for that particular script. So I will show you in NSE website how to go and see the option chain for any particular script or Nifty or Bank Nifty. So just go to Chrome and just go to home page NSE India. In NSE India, you have to just type NSE India and Google. It will take you to this page. And here you just click on the live market and you can see option chain and equity derivatives. So in this page, you can get the detail about different contracts and strike price available for a particular script. So here now you can see like these are the different strike price available for Nifty. So if you are going to check the same for a particular script, for example TCS, you just type TCS in this place and just give go. It will show you the different strike price available for the TCS script. So how to use this option chain? So in option chain, you can find the different strike price and the option premium for the particular strike price. So as I said, now you will take the example of TCS. Now the TCS is trading around 2279 rupees. So you are thinking like in another 1 week or maybe in 2-3 days, it is going to move another 300 points from here. Let's say 2500 rupees you are planning or you are expecting. So what you can do is like you go to the option chain and check what is the premium for that 2200 2500 call. So you can see here in the 2500 the premium is 60 paise. So how to find, so like this you can find the premium for different strike prices in this option chain. Apart from this, this option chain will have all other details also, as I mentioned in this PPT. So from that option chain itself you can find the lot size. What is now I showed you how to check the option premium and all the other required details like open interest and all the other details also will be available in option chain, where we can primarily use that option chain for checking the premium detail and lot size and other required detail. Now I will just show you what is ITM, what is ATM and what is OTM. So in this option chain you can see, right, so different colors are there. So you can say it like everything in this side, like you can this area it is like for the call side and this side is for put side. So if you are thinking like the market is now trading around 2270 rupees. So all the strikes above the 2270 level we used to call them as like OTM, OTM. And all the strike prices which are trading below the current market price we used to call them as ITM. ITM is in the money and OTM is out of the money, and the strike price which is close to the current market price we used to call it as ATM, which is at the money. So this to be keep it as simple, in this option chain where the background which is in white color, so you can see, right, white color, these all are like OTM strikes. And if you see this this background which is in like light yellow color, these all are like ITM calls. So like that you can simply understand. Same in put side, if you see this all the white color background, these all are like OTM strikes, and these yellow color, mild yellow color, these all are like ITM strikes. So like that you can easily find what all are the ITM strikes, OTM strikes and ATM strikes. So how to find lot size of that particular script? So you just click on this, any of this premium any strikes option premium, okay, just click on this and it will take you to this page. So here you can see like market lot size, it is 300. So lot size for the TCS is 300 quantity. So like this you can use the option chain to find all these details like how to see the lot size, how to check the option premium, and what are the different strike prices available for the particular script. So all this detail, and you can easily find what is IPM strike, what is ATM and OTM strike. These are the things you can easily find with the help of the option chain. And what is expiry date? Usually all the expiry, we have two expiries, mainly like weekly expiry and monthly expiry. Most of the all the stocks we have only monthly expiry as of now. In future we might get weekly expiry contract also. But for Nifty and Bank Nifty, we have both weekly expiry and monthly expiry. Monthly expiry used to expiry on every month last Thursday, and this weekly expiry on contract expiry on every week Thursday. And how to calculate the capital required to buy a certain contract? So as I said, now TCS is trading around, I will show you. Yeah, now TCS is trading around 2,279 rupees, and you are thinking like TCS will reach 2,400 rupees in another 2 days, okay, or maybe in tomorrow. So you are planning to buy this 2,400 strike. So how much money you require to buy this particular strike? So to calculate that, you need to multiply the lot size into the options strike premium value. So I take it as like 1.40, you can see, right? So just multiply 1.40 into the lot size is 300, which I show you how to calculate. You just click on this premium and you can find the lot size. So this lot size is not common for all the scripts, so it varies from script to script. For example, if you see Nifty, the lot size is 75, and for Bank Nifty lot size is 25. So like that you can find the lot size and multiply the lot size with the premium for that particular strike. So with that you can easily calculate capital required. So for example, here it is 300 into 1 rupee 40 paise. It is like approximately 450 rupees we require to buy this particular strike contract. So if, as you predicted, if suppose the script is going in bullish direction, which going as per your prediction, slowly this premium value will increase. This 1.40 can or could become like 3 rupees or 4 rupees on coming days. So if suppose from this, while you buying it around 1.50, and if you are seeing tomorrow it is showing like 2 rupees 50 paise, that 1 rupees increase will be like your profit. So how to calculate profit is that difference in price from the bought price into lot price, which is like lot size, which is 300 into 1 rupee, which is like 300 rupees your profit. So like that you can calculate how much capital required to trade a particular strike, and how to calculate profit which you got after entering into that particular trade. So this is how we supposed to do option buying. But I have mentioned already, this option instrument is not for mainly for buying purpose. What we have do now, we just predicted some value and we bought this by giving some 450 rupees. If suppose the 2,400 rupees doesn't come, if market is going, the particular trend is going against you, it will become zero. So total money which you invested 450 rupees will become zero. Actually this 450 will look like small amount, but if you calculate this in long run, if you are doing the same for 3 to 4 times in a month, you will just like that lose 2k. So if you imagine the same in the bigger size, like if you are trading like 15k 30k, just like that 3-4 times you are done like this, you will lose just like that, lose 1 lakh capital. So to avoid this, mainly we have the option strategies and option strategies, and we can sell the options also. So instead of going for buying, it is better for people to learn how to create strategies and how to sell properly different option strike price. For this only nowadays you can see like in Twitter and in Facebook, lot of people are coming with different names, like so many fancy names they are giving, and they are speaking like they have invented the strategy, and they are giving the assurance also this particular strategy is going to give you a phenomenal return. But truth is, if you go and see their personal account, most of the people who post the strategies and all never used to trade their even own strategies. You just ask this question: if a person is knowing certain system which is like going to give him a consistent return, he will be never open to social media and other stuff. He will be busy in taking rest or just spending this valuable time with your family with a consistent or like a huge amount of money which he is keep on generating. So people don't get cheated or just don't, instead of believe them blank, just try to learn what are the basic things in option and how to slowly learn how to build the strategies, and try to just put your knowledge and try to work on and try to trade by yourself. So in coming future, we are going to slowly share some of the basic strategies which could be helpful for people in free. So yeah, so it could be helpful for you people to develop knowledge, and you can in future after some time you can start to trade by yourself also. And we have, for some people they used to say like it is very confusing, is ambiguous for people like us to just see this option chain and all. We Tanish Capital have developed a separate Excel sheet where you can track all these numbers in instead of numbers, you can track everything in graphical way. So we already posted a YouTube video for this, and you can I will attach the link for that video also. You can go through that video to get an idea on how to use the Excel to track the OA also. It will be definitely helpful for a lot of people. So these are the main things which you supposed to keep in your mind before going to start trading in options. So I almost covered most of the things which I have mentioned in the PPT. I hope this will be helpful for newbie who's like totally new to the share market to get an idea like what is options. So again, as I'm saying, instead of blindly following people in Twitter and FB and try to get ideas or strategies from them by paying or by going to classes, start to explore the Google and try to learn all the concepts by yourself. On a long run, it might take you maybe 1 year or 2 years to learn all the basic stuff, but on a long run definitely it is going to be beneficial for you. And one more point, while doing this learning, instead of thinking about making a huge profit or like trying to double the capital within 1 month or 6 months, mainly work on how to make consistent return. So put more effort on creating a setup which give you consistent return for long run. This will be saving you in further in future. So you should keep like protecting capital as your like primary motto, and start to work on it. So I hope this will be very useful for you. In future I will slowly post the remaining topics one by one. Thank you.